The dream of anyone getting started with trading is being able to get this amount of steady wins as a trader. Like you can see it over here on my trade record, steady wins, even though there are some few losses, but then in overall the wins are way more than the losses, and this is a dream of every single trader. And the truth is that what, it's not impossible to get this sort of result. However, for you to be able to get them, you need to fix out some mistake in your technical analysis for you to be able to get here. And in this video, I'll be sharing with you 4 key things, 4 big mistakes a lot of you traders are doing when it comes to technical analysis that you need to stop in order for you to improve your trade record and also get some good wins like you see here. These are not audio wins, these are wins backed with consistent evidence that you can get in my Telegram channel. Now, with this already said, let's get straight into today's video. Let me share with you these 4 key mistakes that you need to stop as a trader if you really want to be able to stay on a profit ride with your technical analysis. As we all know, for you to make money as a trader, your technical analysis needs to be on point. However, for them to be on point, there are some popular mistakes that I see a lot of traders making that I personally made that you need to work on as well. So with this already said, without taking more of your time, kindly help me do the YouTube business by smashing that subscribe button, like this video, and also tell me what to feed down in the comment section. Now with this already said, let's get straight. Let me share with you these 4 mistakes. You need to avoid to stay profitable. Now, the first big technical analysis mistake you need to avoid as a trader to stay profitable is simply stop trying to predict the market. Now, a lot of you traders, when you get on the chart, the first thing you do is that what? You try to predict what next the market wants to do. Now, no good trader actually predicts what the market wants to do, because forex trading is not gambling that you have to predict the probability of the outcome. It's not like that. When it comes to forex trading, you only take things that goes according to your system. Like when I talk about predicting the market, I know in one way or the other, you've probably tried shorting all-time highs before. Maybe it went in your favor or went against you, and I believe you've experienced this. At times, you try longing all-time lows, and then it doesn't end well for you as well. Now, when it comes to trading, one big advice I would tell you is that what? Never try to predict the market, but stick with your trading strategy and let your strategy tell you what to do in the market. Because your attempt to predict what the market will do next will actually lead you into a bigger trouble than you expect. So that's simply the first thing here. The first mistake you need to fix in your technical analysis to be able to stay profitable is simply do not try to predict the next market movement, but let the market itself tells you what he is about to do next. So that's simply the first one on my list here. Simply make sure that you don't try to predict the market movement, but follow your trading strategy, follow your trading rules, and let the rules tell you what to do no matter the current market condition. If the market doesn't fit into your system, leave it and look at other markets. We have over 400 to 500 pairs that you can trade in the market. So don't make that rush to trade actually lead you into trouble by trying to predict what the market will do next, but instead follow your rules and let your rules tell you what to do. Now, some of you might say, okay, I don't have a trading system. How do I build a trading system or a trading strategy? You don't have to worry yourself. You can learn my whole strategy on this channel, because I've created a video covering almost every single part of the strategy that you need to get. Now, I'll be tagging it under this video description. That is the first link you see in this video description. That link will actually take you over there, and then the following links could be linked to Blueberry Founder, which is the prop firm I'm actually using, and you can use my code to get 25% discount. And secondly, you might get a link to the broker I'm personally using, which is Exness, one of the best brokers out there with pure honesty, 100% transparency that you can also use as well. Note, they are not sponsoring this video. Those are the services I personally use. That's why I'm recommending them to you as well. Now, that's simply the first point on here when it comes to fixing your technical analysis error is simply don't try to predict the market, but let your system tell you what to do in the market. Remember, price is key. Whatever price is doing right now is what you should also follow. Number 2 is simply you don't have a defined time frame. Now, I know you are wondering, what does it mean by having a defined time frame as a trader? Now, here is it. As a trader, you need to have a specific time frame that you look into, that you basically use to judge the market. Like for me, when I was backtesting my liquidity supply and demand trading strategy, I was mainly using the daily, 4 hour, 1 hour, and 30-minute time frame. Now, I was working with these 4 time frames. Now, here's what I basically do on this time frame. On the daily time frame, I use it to define the overall market movement. So the daily time frame, if it tells me the market is an overall uptrend, I look for buys. However, I have that 4 hour which should also do its duty. Now, after the 4 hour tells me the overall trend, now I go down to the 4 hour time frame. Now, on the 4 hour time frame, I want to see where is the last part the market created market shift and breakout structure to. Now, I look for the last market shift and breakout structure. If they are to the downside, I look for sales. If they are to the upside, I look for buys. Now, on the 1 hour time frame, I use it to identify my supply and demand levels. However, I don't really accept the levels on the 1 hour time frame because I go down to the 30-minute time frame to go modify the levels. Now, the reason why I'm modifying the levels on the 30-minute time frame is that on the 1 hour time frame, the levels might be really big. Meanwhile, on the 30 minutes, I can modify them to be a little bit smaller and then focus on one particular part, which will in return lower how much I'm going to risk per the trade, which basically means that what my stop loss will be smaller and at the same time will be better. So because the smaller the stop loss that I use, the more I can target, the higher I can go into the trade. That's why I see that for some trade I go in on huge lot and some are going on small lot. Now, basically for me, in general, these are the time frames that I work with. And as a trader, if you really want to stay profitable, you need to have specific time frames. And this time frame should tell you what they do so that you stick to that. So like, for example, if this time frame that I give you right now doesn't follow the system, doesn't abide by my trading system, maybe the daily time frame is showing that the market is in an uptrend, and then the 4-hour time frame is showing me that the market is on maybe in a pullback phase. It's not telling me that the market is in a pullback phase. So basically, if the daily tell me that the market is in an uptrend, I want the 4-hour to tell me that the market is in a pullback phase, meaning pushing back to previous key level. Now I want the 1 hour to at least tell me that to tell me the same thing that 4 hour is telling me, and at the same time show me some key supply and demand levels. Now if the 1 hour shows me some key supply and demand levels, now I want the 30 minutes to also have this same supply and demand levels just as the 1 hour did, but make sure that they should be a little bit smaller so I can modify it to those particular parts and then focus on those tiny levels. Now this is basically what I do, and I get my entries confirmation on the 30-minute as well. So now you see that each of the time frame I have their own duty. Now if you really want to stay profitable, so you need to pick time frames and make sure that this time frame have their own duty. Now I did not wake up one morning and pick this time frame. Before I did this, I've used the weekly time frame, I've used the 15-minute time frame, I've used the 2 hours time frame, I've used the 3 hour. Like I've used so many time frames before I concluded on this one. Now this is the importance of backtesting your trading strategy. Before you start using your strategy to trade your real money, make sure that you've backtested it and also traded it on a demo to get enough information of it before you start trading it on a live account. Now that's simply all. Make sure you have defined time frame. You don't have to pick 4 time frames because at times I do omit the 1 hour and go with the other 3 because the 1 hour doesn't really do much for me. So at times I can just not look at it. If you notice that when I'm doing my live stream, at times I don't just look at it. I just look at the 4 hour one, the daily 4 hour, and then the 30 minutes, and I'm good to go. So basically the 1 hour, they're just there for bonus because everything I do on the 1 hour, I still go modify it on the 30 minutes again. Now basically, you also need to pick your specific time frames and stick to it. Like I can use these time frames for day trading. I can use them for swing trading. Like I can hold trade on the 30-minute time frame and I hold it for 2-3 days. It still plays out well. Why? Because I've used the daily and 4 hour to look at the higher time frame perspective. That's why I need to make sure that my 30-minute trade need to follow in line with the daily and 4 hour trade. Now this is simply all I have for you on this point. Now let's move over to point number 3 and 4 in this video. But if you haven't subscribed yet, I think you are missing some of the best trading video because this is one of the most 100% transparent channel. I show you my loss, I show you my wins, I show you my flaws and everything, and also show you how you can fix them at your end. Now let's move over to the third point on my list. Now the third mistake a lot of you traders are making is that you don't have a defined pattern in your trade. Now if you look at my trading screenshot or my live stream, you notice that all my trades look alike. Like the levels look alike, the entry look alike, the markings, every single thing look alike. Now this is one important thing to be a profitable trader. Like this is one of the most important thing when it comes to technical analysis is making sure that all your trade look alike. Now if all look alike, it basically means you are doing something right. And if all look alike and then they are giving you good results over time, man, that's simply all you need to be a profitable trader. They don't have to give you 100% win rate. They just have to give you a higher risk to reward than, which means that your wins should be greater than your losses. So basically, the importance of making sure all your trade look alike, it simply tells you that you are following your trading rules. Because if all your trade setup don't look alike, it basically means you are not following your rules. This is why they need to look alike, because following your rules is the most important thing. I always tell people that the money you made going against your trading rules doesn't belong to you, because the market will take it, and not just take it alone, but take it 2 times 3 or more. And the money you made going according to your trading rule is your money, and the market can never take that one back from you. And the money you lost going in according to your trading rule is a legitimate loss that shouldn't affect you. So basically means that the most important thing in trading is going according to your rules. And if you are going according to your rules, it automatically means that all your setups need to look alike. Now this is very important as a trader. So what I mean by this is that make sure you have a trading pattern. Is that I'm not referring to you having drawing some random lines over and over again. No, I'm talking about having a specific level. Like for example, I trade only supply and demand. So when I enter the market, I'm either looking for supplies or I'm looking for demand. And when I'm looking for my supplies and demand, I only look for one type of supply and demand, the single candle demand system or the single candle supply. I'm not looking for a range supply. I'm not looking for a trend supply. I'm basically looking for the single candle model that I'm trading, which is the one I'm used to. Now, basically, that simply means that I have a single pattern. So if I don't see this particular pattern, I'm not taking a trade. And secondly, when the market comes to my key level, I wait for a 30-minute close confirmation. Now, across all my trade, I must look for this close confirmation. If it close too far, I'm not taking the trade. I wait for a little pushback before I take the trade. And if it close inside the level, I'm not also taking the trade because I need it to close outside and not still too far away. Now, if the market doesn't meet with this condition, I'm not taking it. Now, with this, you see that my trade have no other option but to look alike. Now, my stop loss need to be around 50% of the level or outside the level, depending on the size of the level. If the level is really big, I need to be within 50% of the level. Like I don't have to go below. Meaning that my stop losses need to be around 30 pips and below. If it's above 30 pips, I'm likely not to take it. So I have to maintain that range to be able to get my decent risk to reward target. Now this simply make all my trade setup looks alike. So if you think that you are trading better, your setups don't look alike, then you have a big problem and you need to fix it. So now this is simply the 13.5 years. Simply pick a specific pattern. If you are trading other blocks, stick to other blocks. If you are trading fair value gaps, stick to fair value gaps. If you are trading trend line, stick to trend line. Don't come and trade fair value gaps today, other blocks tomorrow, supply and demand the next day, support and resistance the next day, and then fair value gaps or trend line the following day. No. Pick one single system and focus on it. That is the best way to get a decent reward. Now the final one on my list is simply impatience. Like you can have the best trading rules, stick to your trading plan, have same pattern that you are looking for, not predicting the market, but your lack of patience will also make you fail in the trading industry. Now this is the honest truth. When it comes to trading, patience is very important. Like for example, I can identify a supply level today and wait for like 1 week or more before the market will come to that supply. But the truth is that when the market comes, I'm still going to take it because I have a time span for all my levels. If I identify a supply level today, I need to hold it for at least 2 weeks. So if that level isn't mitigated within 2 weeks period of time, then I can take it. But if the level is not mitigated after 2 weeks, I can take it again. Which means that every single level I identified have a 2 weeks expirational period. So once it's above 2 weeks, I'm not taking any trade on that level again. But since it's not above 2 weeks, whenever the market comes there, I'm going to take my trade. Now why? Because I've backtested it and I know that this actually works for me. So when I identify a level today and the market doesn't come to that level, I'm not looking for any other trading opportunity in that market until the market comes to that level. If it doesn't, I'm staying out. If it comes, I'm taking it. Now, this is something you also need to learn as well if you want to stay profitable in the market. It's simply being patient enough to wait for the market to come to your level. Like, I can identify a market today, and throughout this week, the market will not come there. Probably it will come the following week. But whenever it comes, I'm going to take the trade, provided that what is still below the expirational period that I've set for all my trade system. So this is basically all I have for you in this video. Simply, if you want to be a good technical trader, then you need to follow these rules. One, don't try to predict the market. Follow your system. Let your system define the pattern for you. Secondly, make sure that you have defined time frames that you look into. Let those time frames tell you what to consider in the market and don't go against those time frames. Thirdly, make sure that what you have a defined pattern you are trading and stick to it. And fourthly, make sure that what you have the patience to actually wait for the market to come to your level, the patience to wait for the market to give you a confirmation, the patience to wait for the market to hit your stop loss, and the patience to wait for the market to hit your take profit or give you a decent profit in general. So see you in my next video. Bye.